What's going on, people? It's your boy Hagen NTV and welcome to another video. Well, in this video I am going to share with you why the DXY is preventing you from making money in the markets. So I know a lot of times, a lot of people sometimes they're like, I have this other block and I have this fair value gap, EMA crossover, whatever strategy you're using, and just like, it's not working. I have a lot of failures with it. All this stuff is bullshit. Like, people keep claiming they make money with this and that. They're actually not making money. But the truth of the matter is, a lot of times what happens, we just focus on just one chart. We don't do intermarket analysis. We don't do anything to try to find correlation between one asset class versus another asset class that are correlated to each other. So like the DXY, if the dollar goes up, other asset class tend to come down. So as simple as that sounds, there are so many traders that actually do not implement that in their trading. And today I'm going to show you how this can catapult whatever it is you're learning and whatever it is you're trading, how this is going to catapult your trading to another level. So maybe if you're somebody, you're just like, you know, your strategy makes you like 30 or 40%, this can actually boost you up to another like 10-20%. Also, this can prevent you from entering like a lot of losing trades and stuff like that. But enough of me rambling, let's jump into the chart and I'll show you exactly what it is I'm talking about. So the first thing we notice is, like I said, is whenever dollar goes up, that's the DXY, other asset class, S&P, Euro, US dollar, everything else have to, Euro USD, GBP USD, anything tied to the dollar has to come down. So a quick example for that is like today after the open, there was news around 10. So I was like, okay, let's see exactly what's happening here in the chart. And you can see here, price was moving up here. I was expecting the dollar because here, ES was actually breaking highs. So I was expecting the dollar to start breaking lows. And just for somebody who doesn't know exactly how this got here, let me take this out. You just go in here, press this, and you, actually, let's go. Yeah, you press this, ES, DXY, new pane, and you just press that. Then you can just go in and change like all the stuff, like to into candles and all that stuff. So, but back to this. So this was happening today, and what happened was the dollar DXY was going up and your S&P was also going up. S&P was going down and dollar was going down. Whenever I see this in the market, I do not care if I'm going to make $100 million today. It tells me there's going to be a lot of back and forth. Price is not going to be that clean. There'll be certain points in the market where you will be able to get something out of it, out of the market, but you're going to have to sweat for it. You're going to have to like labor for whatever it is you're targeting, maybe 5 handles, 10, 20, whatever it is you're trying to get. These markets tend, whenever it does this, I tend to like just stay away. So in the morning after the news at 10 o'clock, I came to the markets, like, look at all this back and forth, back and forth, back and forth. And if you notice, it was going lower and DXY was going lower. Immediately, the moment I saw that, I was like, yeah, this is going to be a crazy day. I was like, let me wait to the news. Maybe the news is going to like actually swing things into the right direction. But it didn't. It was coming down. And the same, then here, there was a slight shift here. But at this point, I was looking for prices to go lower. I was looking for lower opportunities. And it got back all the way up here. Cool. The moment it starts coming down, you see here, it also starts coming down. Like, whenever it makes a move up, it's not as energetic as what the S&P was making. Then eventually you go into the lunch hour, it does exactly the same. And then one tip is, whenever this happens, I usually just wait till like later in the day, the afternoon session, which I never used to know how to trade, but now I think it's arguably probably my best because it's so easy. The market already knows what it wants to do, and it's like literally going to continue from what happened in the AM session, or it's just going to try to seek a certain liquidity in terms of like a swing high or inefficiency. that it created during the AM session. So here, this is a beautiful one. This is a new week opening gap. Price left, and this is a 15 minutes fair value gap. Price left it, came back, and this was acting as support, resistance turned into support. So price came back, and then what happened was you have this shift of market structure here, fair value gap, simple A, B, C, D. It's easy, man. Like, liquidity was taken here, and then it was on the 15 minutes fair value gap, which is acting as support now, and also it was sitting on top of a new week opening gap to the tick. Fair value gap here, you can I'll change this color. Let's change this color to green and here you can take a buy. You can take a buy here, stop loss right below this, and you just ride it all the way up. Also, what also gives you the confirmation, this high was broken here. Now, when you look, okay, let's do this. So this high was broken, cool. When you look in here, this low also was broken. Like I said, you want to see the opposite of what's happening to the market you're watching. You want to see the opposite in the dollar. And the dollar did that. This is an easy trade. You can just go in, get a little something, stop loss, 500. You can get 5. It gave 10. I think it gave 14. At this point in time, I wasn't going to even take the trade, but I came back. I was like, yep, this is exactly what you want to start looking for. So if you're somebody, you're trading, I know that you're like, oh, this is just a simple sample set. Go back to your chart and look at it. Whenever price is moving in the opposite, in the same direction, that's DXY and ES or whatever you're trading that is correlated to the dollar. Whenever DXY is moving in similar direction, you are going to struggle in the market. Now, a lot of people will come out and say, but what about this? You can easily short this and stuff. Yes, you can and actually make money, but the point I'm trying to make here, you're trying to prevent yourself from hurting yourself. So, of course, it can provide situations like this for you, and you take it, you make money. But maybe the next 8 or 7 times it happens, you're going to lose. This is not about just trying to catch every swing. This is about preventing yourself from going into difficult market conditions. You being able to look at it and say, no, it's not worth my time. So yeah, that's it for me for this. Hopefully this is helpful. Go back in your charts, go and backtest 5 minutes, 2 minutes, 1 minute, 30 seconds daily. You will see if dollar is going higher, other things needs to start dropping. And whenever DXY is going down, ES and other asset classes have to go up. That is tied with the dollar. Whenever both are going in the same direction, stay away. Stay away because you're just going to save yourself from a lot of stress and pain. But yeah, anyways, guys, thank you so much for watching. Hopefully this is helpful to you. Yeah, leave your comments down below and hit that subscribe button if you're new also. And I'll talk to you guys in the next one. Peace.